Alright, good afternoon everybody. Alright, we should be live on YouTube, live on the virtual trading floor. Hey, hey! For some reason I'm getting like an uploading error on the YouTube. Not sure if anybody else is in there or sees it. Alright, looks like we're good. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading. Position disclosure. All right. How did we close? S&P's negative. Wow. Down 0.1%. Qs are up 0.6%. Tech was our leader today. IWM barely kept it in the green, 0.1%. And the Dow was where the real weakness was. The Dow closed down 0.34%. So the big question for today was if we get continuation off of Friday. So quick recap of Friday, because we don't do afternoon meetings on Fridays. Friday was, at least by the close, an extremely bullish day. Though there was a good bit of volatility that was going on during it. So Friday morning, I think it was 8:30, we had non-farm payrolls come out. A lot of people are working, maybe too many people are working, but the hourly earnings number, which is really important, basically how much money people are getting paid, was below expectations, and they also revised October and November lower. For me, my thought process, and we initially rallied on that, is that that's almost like a Goldilocks scenario. You know, it's not really that we don't want people to be working anymore. We want people to be working, but the market's concerned about too many people working because people... Got you, Charles. I don't know why that's been happening recently. The YouTube video has certainly been where it's been a little bit better. Anyway, to me, that jobs number, I find it to almost be like a Goldilocks type of scenario where, you know, it's not that we don't want people to be working. We, of course, want people to be working. But if too many people are working and too many people are making too much money and they're spending a lot of money, it makes it more difficult to bring inflation down. And one of the bigger concerns that the Fed has been having has been about a wage increase spiral happening, which really would help to exacerbate inflation. So I think people working, you know, the unemployment number dropped down at 3.5% is great. But, you know, the fact that hourly average earnings number, you know, that we were able to keep a lid on that, and that the October, November numbers were revised lower, you know, that doesn't show any sign of a wage spiral. So I think that's actually great. Initially on Friday, we rallied really hard pre-market, and then right after the open, 5 minutes after the open, we sold off hard. Created a little bit of pivot almost on a gap fill, a little bit of a hammer. We actually called out some longs down there, if I remember correctly. Initially just looking for a retracement, a bounce back trade. That bounce back trade turned into a whole heck of a lot more at 10 a.m. when the ISM Services PMI number came out. And that number was, I think, 49.6 versus 55 expectations. So it's, and I was reading this and actually created a little video earlier today. I think that's the first number that potentially shows a contraction in services since May of 2020. So the market exploded on that, as it should, because the one real sticky area of inflation is on the services side. That's what really needs to come down. Audio breaking up. Is audio breaking up for anybody else? Is it breaking up on YouTube as well? I'm breaking up like crazy on both. Ugh. What the hell is going on here? Well, there's nothing I can do unless I fully restart everything. So the choice is push on or don't. Just give it a moment. Maybe it'll come back together. I gotta get these internet people on the phone. Get them to come back over here. At the same time, I'm not listening to myself because that would be weird. If the sound is there, it's decent. I'm just going to direct everybody over to that YouTube link as long as the sound is holding in. Yeah, and that's the way to do it. All right, sorry about that, guys. Sorry about that for people on the VTF. I'm gonna get these internet people over here. I'll contact them right after the afternoon meeting today to figure this out. I know I'm asking a lot from the internet to be streaming in multiple places at once and still have my trading software up and running, which is still moving in real time. But anyway, hopefully people are listening on the VTF. I mean, sorry, on the YouTube, and it sounds good over there. So what I was saying was so we talked about the non-farm payrolls number came out, what I think that means, and then at 10 a.m. is when we had the ISM services PMI number come out at 49.6 versus expectations of 55, and that's one of the areas where bad news is very much good news, because services inflation is the bigger problem. Goods inflation has massively dissipated. It's come down a lot. Everyone's telling me that the housing market is basically frozen right now. So I think that those numbers are going to still come down, at least to some degree. Anyway, with that number at 10 a.m. coming in weak, I might just have to end the meeting if nothing is working. But I'm just gonna push on as is, and if it's captured, it's captured. You guys can go back and listen, and if it's not, then it's not. There's nothing else I can do. The only thing to do is just quit it. So I'm just gonna keep pushing, and then contact the internet people. Yeah. So anyway, market rallied on that, and what that led to is basically a technical breakout on the daily chart, which is massive. It breaks to the upside. And as a general rule, the longer and tighter your consolidation is, the bigger the breakout. That's kind of a general rule. It doesn't have to apply all the time. So we had the beginnings of a breakout for at least the SPYs and the IWM on Friday. The Qs didn't actually break out. They got right up to the resistance of the range and kind of held there, which is QQQ 27. And the big question coming into today is, can we get follow through? So the SPYs gapped up. We set the open. The big question was, is this a common gap into resistance, which is technically something that you want to sell, or can we get further follow through on the breakout from yesterday? And I was slightly more inclined to think that we could get further follow through, because again, after a 13-day tight range, we finally broke out on Friday. If we can get above 390, the market should continue. So again, one of the ways in which I really like to think about markets is in terms of if-then statements. So we're gapping right up to 390. 390 is a resistance level. If the market can break through 390, then we should be able to get some degree of continuation. And we got up to that 390. We opened up right there. It was a little bit tricky off the open. The big thing we wanted to see is, how does the market handle the smaller time frame extension as we're gapping up right to this big level? And it handled it pretty well, with a little bit of a technical price correction, but not too bad, led by a little pivot. The ADMA eventually caught up to it, and then 10 minutes later, we're back above 390. We're breaking opening highs, and the market's looking fantastic. It held 178, which is the upper band of the resistance level from its consolidation that we had been looking at as support, exactly what you want to see. Pivoted there, and eventually that made new highs as well. And it was the NASDAQ that was the real major leader here. Totally just went sideways, didn't even price correct in the beginning of the day. ADMA caught up and just got great continuation. Apple in the beginning of the day was giving great continuation. Looking beautiful, real leader for the market. Apple being above 130 is huge. That's a previous level on which it broke down from. Amazon, same thing. Amazon ended up having a big day on Friday. This gapped up really big, was showing a lot of early strength. Everything is looking fantastic. And then we just kind of had one of these rounded tops. Having a big move, and again, look where we failed, by the way. We failed at SPY 275. What did we say in the morning meeting today? Where's the next resistance level? The next resistance level is SPY 275. Here we say we would consider potentially looking to short the SPYs if we could get up there. I said 395. We didn't quite get to 395. That would have been $10 of extension from the ADMA. We almost got to 394. So it's no surprise that we stalled out. What we're left with at the end of the day is a pretty gross looking daily candle with an upside tail. I know, Amber. I know, we just went through this a lot, for continuation tomorrow. So that still could be in play. We didn't actually really break any key levels to the downside that would be concerning. If the SPY gets back below 385, it's going to be a much bigger problem. But you know, at least for the moment, at least for the moment, we're holding above those levels. But today's a weak candle. We got to see what comes about with this next earnings season. I'm still going into this earnings season as optimistic, and the main reason optimistic is because of the weakness in the dollar. The way that this dollar has sold off has been incredible. You know, we peaked out at the end of September. We've been downtrending since the beginning of November. That should help support earnings from these multinationals. Anyway, that's all I got. Really sorry about the internet situation here. Okay, no idea what's going on. It's very frustrating to me. So hopefully the YouTube was able to hold up and is recording things well, so you guys can go back and rewatch this if you weren't able to properly follow along in the virtual trading floor. And otherwise, that's all I got. I'm happy to answer any questions. I see Dave asked a question. Anybody else that wants to post questions, I'm happy to answer them. Otherwise, I'm just going to wrap it up and get the internet people on the phone. From Dave here, want to know your thoughts on whether the 50 crossing the 200-day, which is a golden cross in the SPY, is enough for you to exit the tactical approach, or if you need to see other things besides that before becoming bullish on the market again. This is the first time in a long time that those two are within $10 of each other. Okay, cool. I don't have the 50-day on this chart. I do have my 200-day. For me, a golden cross, you know, it's nice. It's not like one signal that changes my entire happened yet. So the way that's neutral, that's the way I always talk about it. So, you know, small time frame here. Friday's breakout, I think, made us small time frame actually bullish again. But medium time frame, we're neutral. We're kind of trend less. Big time frame, we are still downtrending. The big positive thing from the technicals I've been pointing to support a wedge creation. But really what you need is you need the market to break the downtrend. Which in order to do that, we really need to get back to script either. You need this 200-day and the 50, not just to cross, but you need this 200-day to round up. You need this to round up. When it's pointing higher, and I can look to be bullish on things, and then maybe I can flip the script again and be a little less tactical as you're describing it, a little bit more through. Doesn't look like there's any more questions, so if you want, we can just do a short afternoon meeting so I can get on the phone with you. From Todd. Question on inside day. Okay, so people are still getting some information if Dave was able to say thank you. That's good. From Todd, question on inside day trades. What is your approach when a stock opens above, below the prior day's range? Example on from today. I had this on my radar, but I sat on my hands. Sure. So when approaching inside days, this doesn't really happen on smaller time frames. Daily charts are where we get the gaps, right? So as opposed to like a 5-minute chart where it's almost always going to trade through the inside 5 and either up or down, with a daily candle, you can gap up or above or below an inside day high or an inside day low. Whenever I see a gap up above an inside day, first of all, you want to make sure that it's an important inside bar. That'd be the first thing I would just remind everyone. Not all inside candles are important. Inside candles are important specifically within periods of range or momentum. If you're looking at an inside bar within a consolidation, which is honestly what this ON kind of looks like, I don't want to say it has no meaning, but it has less meaning and has a much higher probability of giving you like a false signal. That's why I always say if you trade every inside bar that you find in the market, you're long on the break of every inside bar to the upside, you're short on the break of every inside bar to the downside, I promise you're going to lose money in the long run. Inside candles are tools that we use for execution when we like other things. And that could be anything from an inside week all the way down to an inside 5-minute candle. So that would be the first thing I would note about this ON is, you know, maybe you could like it because it's like an inside day off of support, but besides that, it also looks like it's within a bigger consolidation, and I don't like the inside candles as much when they're within bigger consolidations. I want there to be an uptrend, and that inside and up is giving me trend continuation. I want there to be momentum, and then you're getting a quick 5-minute rest or daily candle rest that goes for 1 or 2 bars. Then you're getting continuation from it. Like on a daily chart, we sometimes call that like a 1, 2, 3 play. That's what I really want to see. But again, if you have the right inside candle and it, for instance, gaps above it, we want to just gapping above or below the inside day is not enough. You need to confirm that it's actually able to hold above. And the way that you do that is actually very similar to what we were doing with the spies today with the 390 level. Okay, it's gapping just to above 390. Does that mean that we should explode higher this morning? Maybe, maybe not. Just because you're gapping up above the level, it's not enough. I need to hold above the level. How do I know that I've held on there long enough? Those small time frame moving averages catch up. That equilibrium catches up. And then I can feel confident to look for continuation. So you really want it to be able to hold. And then the other thing is you got to assess how big it was. If there's an inside day and then there's news and it gaps up massively, that inside day almost becomes irrelevant because the gap becomes so big. So ideally you've got it just kind of. Ideally, it either doesn't gap above it at all. It trades through it. That makes the actual trade easier. Or it gaps above it by like an appropriate amount where you can watch the small time frame equilibrium catch up, confirm that it's holding above, and then look for longs in the direction of the break. So that's how I go about it. Hope that helps, Todd. From Kyle on YouTube, was watching NVIDIA for a long near the open. If you saw a potential entry, this was gapping above 150. So what I said in the morning meeting was a pullback to 150 would be something that we could look to go long. Some sort of pullback off the open. I didn't want to buy 150. Kind of difficult to pay up to 152 versus 150. I don't love that risk reward, but what you want to find is then a smaller time frame setup to execute while it's holding above 150 when the ADMA catches up. And that's tricky. It's tricky because this pullback here is shallow. It doesn't even pull back to the ADMA. So it really doesn't give you like a great small time frame supported by the equilibrium catch-up, and you can go long versus it. It still kind of would have been a lot of risk. Probably too much risk for me. You probably would have ended up having to buy like 153.20 or something with a stop loss at 150.140. So that's where the trade is. Obviously, whenever you're looking at a potential trade, you have to assess the risk reward of that trade. And even though maybe that is the trade that you can get you long NVIDIA, do you really want to pay up $1.80 in NVIDIA? I know NVIDIA can move. In today's case, it actually would have worked out pretty well. You would have paid up. You would have gotten 153.20, let's say, is the end price, and you would have caught like an $8 move off of it. I think it's difficult to pay out that much and have size and conviction. So maybe I got to get this worked out ASAP, or just get a whole new internet provider, get multiple internet providers. I don't know. So I hope everybody had a good day today. I think that we navigated the market pretty well, especially the first half of the day. And let's see what tomorrow provides us with a gap. So have a great night, everybody. I'll see you tomorrow.